Welcome to Theo Trade. This is Don Kaufman. It's August 1st, 2017, doing the Theo Night video. Well, first and foremost, Apple. Earnings are out here after the bell, and the underlying is taken almost 2 standard deviations higher. Let me explain about those standard deviations real quick here. So we're going to go over to the trade tab on Thinkorswim, and if I open up an option chain, you look to the right side of your screen, you'll see what is the expected move. Now, that's the option marketplace trying to ultimately ascertain what the movement is going to be over the next 3 days. Talked a lot about expected move literally in last night's kind of Theo Trade video. Nevertheless, we're looking for about a $5.40 expected move. What do we get here in the after hours? Well, Apple closed the trading session at 150. Here in the after hours is trading at 159. Now, before I go any further over here, so it's almost a 2 standard deviation move. What would be a 2 standard deviation move would be what? About $5.40 times 2. So you're almost at an $11 move, okay? I'll talk about that here momentarily because we're kind of caught right now in Apple between a rock and a hard place, and I'll explain that in a moment. But before I get there, we just have to discuss the market cap, okay? And the market cap in Apple here, there's, 5.2 billion shares. You just take 5.2, multiply it by, 159, and you realize now you're talking about $800 billion plus market cap. It's just, napkin kind of math over here. $800 billion market cap. And at this point, you have to step back from this, gaze at it, and recognize, is this complete and total dominance from Apple, or are we hitting critical mass of the market cap? And when I ask about critical mass, it's for this reason. Right now, we're not looking at Apple. We're looking at the NASDAQ futures, and the NASDAQ futures closed, the standard session, for the most part, unchanged. So we closed the session right around 58.90. And here we are. What one underlying can do to the NASDAQ futures, it's complete and utter dominance right now. That, people, is a 40-point move to the entire NASDAQ 100. And this is, at a point like this, please, you just have to start to shake your head. And I've been in this business long enough. When you have one underlying coming out and dominating, should it really move an entire index? And that's why I kind of asked a moment ago, is it dominance or is it like critical mass? And by critical mass, I mean, are we seeing a marketplace that is simply putting not only too much weight into Apple, but you start trading more on hopium than reality, especially when you see a 40-point move in the NASDAQ futures. And I started looking around in the after hours, and I'm like, well, what did Facebook do? Did Facebook reiterate the move? Did it do the same move? And you can see Facebook, closed right around 170. All right, maybe in the after hours traded up about 50 cents. So then, of course, I looked at Microsoft, and Microsoft, did it really catch a bid? And again, this is because of Apple's earnings. You're seeing Microsoft. Did it kind of catch a bid? Not really, maybe about 15 cents. So then I looked down at Google, all right? Google looks like maybe it jumped like $4 or $5 here in the after hours. And Amazon, did Amazon jump in the after hours? Well, frankly, Amazon ran up before, but in the aftermarket, it's right around 1,000, which is pretty much where it was cruising around most of the day. So nothing huge over there. So again, I'm left thinking that there's not all that much opportunity, if you will, in the NASDAQ to the upside. Do you feel that coming into tomorrow's trading session on Wednesday that everything is fully priced, if you will? And tomorrow morning, I'll be looking for the NASDAQ to have the possibility of opening in and around, 59.50. I think there could actually be a bit of a run-up in the pre-market all the way back up to like 59.50, and I'm going to look for the possibility to fade markets at the open tomorrow. And what are you, crazy? Apple's spectacular earnings over here. Yeah, I've seen this movie before. And when you have a major index product being influenced by one underlying, it doesn't matter even that the market cap is so phenomenally large inside of Apple. Again, this one underlying is not going to change the entire marketplace literally overnight. So it's an opportunity in here to see if markets do fade again in the morning. Now, back to Apple. Okay, with Apple, when I say it's kind of caught between a rock and a hard place, it's very infrequent that, first of all, you move 2 standard deviations. And for those of you unaware of some of the math in here, so if you look at a distribution curve, okay, on this distribution curve, most occurrences happen 68% of the time, right? 2 deviations would incorporate 95%. And right now, when I say we're caught between a rock and a hard place, we did not move 1 deviation. 1 deviation over here would have been like up $5 and like, 40 cents and change, right? Right now, though, we're like +9. We're right kind of between 1 and 2 deviations. And it's rare. Markets have very good tendency to either drive right to the edge of a deviation or go right to 2 deviations. So when you're +9, what you ultimately get is a marketplace that at the cash open tomorrow, what could it do? Could it burst up another $2? Or is it going to come screaming all the way back in to its deviation? And I actually believe that the latter happens to be relevant in this particular case. What am I saying in that circumstance? It would not surprise me that at a point tomorrow to see Apple trade back in the neighborhood. And again, I'm going to throw an exact price over here. Wouldn't surprise me to see Apple at 155, and change. 155.50 kind of range, and I'll just round it off there. Again, coming back into the 1 deviation. So why do I believe that that's prevalent? 600,000 contracts traded today, and those 600,000 contracts, you have to recognize, people are buying options and selling options, but they're buying options and selling options predicated on the idea of a $5.40 move. So the forces of hedging, okay, very likely could pull Apple back under. And now this is a big move we're talking about. The stock would have to come down $3 and change at some point during the trading session, which again, I think is relevant. It's capable of doing that. It also, okay, would not surprise me at a portion today if we're going to see a wild move tomorrow. We could open around 2 deviations and come back in. So again, expect a fairly broad range of trade inside of Apple tomorrow. Wouldn't surprise me to see back at the 155. And that's a very, very bold statement that I'm making with that one. One last thing I want to leave you with outside of, Apple and the fact that I believe that, again, I think the NASDAQ is going to open a little bit stronger than it currently is and ultimately fade on the trading day tomorrow. We'll see if that's relevant. Another area that I've been watching in just the last few days, we've got the XLF, the financials over here, and I'll just pop open to a 3-year. You can see they're making multiple year highs. In fact, you have to go all the way back so we're all clear. You got to go back to really the financial crisis to see levels that are back as high as they are currently inside of the XLF. But my point over here is the XLF, okay, this is make or break territory right now. And by that, I very simply mean, okay, we head up from this level and we could actually explode into some new territory, which is going to take the S&Ps and give them a clear shot directly if the, to put an exact number to this, if you see the XLF right here above 25.40, which is, again, only another 13 cents away, right? See the XLF at 25.40. It's a clear shot for the S&Ps to 2,500. Starting to get above 25.50, and you've got a clean shot well above, again, 2,500 in the S&P futures. Keep it in mind because a pop to the upside in the XLF really opens the door for the S&P futures. And quite frankly, the S&P futures, if you haven't been watching them in the last couple of days, okay, people were doing nothing. I mean, is there a term for less than nothing? Here is all the way back to like July 24th. Here we currently are. We've been trading roughly, 2,475 and change and just meandering in that zone, which is working because we're selling premium, and we're selling premium specifically in the SPX, and we're buying premium over here in the Qs. So stay tuned on that front. That's our tetrapod spread for this week. And again, I made some fairly bold statements here in Apple, which I believe Apple comes in tomorrow. Look for the 150, 155 print, 155 and change print right back inside the expected move. Surely based on the magnitude of contract size over there, would not surprise me at all. You realize you get a 2 deviation move. There's a lot of people on the wrong side of that trade. That thing is not going to work out well for them. Thanks everybody for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.